Yeah, good luck with that. It's time now for today's phone-in. The mortgage mum, also known as Sarah Tucker, is here to take your call. So let's get straight into it. Sarah, lovely to see you, babe. First up, I believe we've got Jen. Jen, are you there? Hi, Jen, is that you?
It is, yeah.
Hello, Jen. Lovely to speak to you. What do you want to ask Sarah?
So our mortgage is coming to the end, I think it's about December, January time.
Okay.
We've been offered with the same company a fixed rate for 2 years, which is slightly cheaper, or we've been offered a 5 years fixed, which is, sorry, the other way around. So the 2 years is a little bit more expensive, but the 5 years a little bit cheaper.
Yeah.
We don't know really what to do in respect. Do we go on the 5 years fixed so we know that we're paying the same amount, or we're a bit unsure if they're going to drop in price or go up, so we don't really know what to do, really.
Okay,
risk, isn't it,
it
Sarah?
is. It's a really hard one, and it really depends what you see happening for yourself in the next 2 to 5 years. Are you happy in that house, for one, because you don't want to obviously fix for 5 years and then want to move, ideally? The 5-year fixed rates are cheaper for a reason, because they believe the rates will come down by 5 years, and that's why they make them cheaper. If you want the certainty and stability of that fixed rate, knowing what it is for 5 years, then absolutely fix it in. Trust your gut feeling as well. You know, it's really hard to know what the right thing is, but look at your individual situation. Are you happy with your current house for 5 years? And if so, at least you know what you're paying, because we've seen interest rates have gone up and they've gone down, and there's all sorts of things in the economy that affect them. So they're making a guess, really, for that 5-year rate. And if that works for you, then I would say yes, fix for 5
Jen,
years.
what are you thinking at the minute?
Well, I am thinking in my gut, I'm thinking 5 years, because I know it is slightly cheaper and everything going up in price.
Yeah.
I do think it would be better, but then also I don't want to get to 2 years and then they drop dramatically and then we're paying the higher rate as such.
Yeah. Well, the interest rates have come down. So if you're looking at a 5-year fixed rate now, make sure your broker, whoever you're using, is going to check that deal again for you before you complete, because if they come down again, you want to grab the next best rate. They could come down. We're very unlikely to see them go to what they were in COVID, 1 or 2%. So if that makes you feel any better, if you've got a decent rate at the moment, you're very unlikely to sort of watch and go, oh my goodness, you know, this could have been half of what it was. But of course, that is always a risk. Maybe just don't look at the rates. If you fix in for 5 years, just look away for a little while.
Put the blinkers on, Jen. Keep them on. Jen, thanks so much for calling.
Big decision.
Okay, thank you.
Take care, Jen.
Well done. Right, next on the line, we've got Sheila. Sheila, what would you like to ask Sarah?
Hi.
Hi.
Yes, I've got a mortgage with my ex-partner, and he's now moved out and left me to pay for the mortgage myself. So I'm just wondering, how can I bring it down a bit lower, and how to continue with it, really, because I wish to remain in the property.
Yeah,
That's difficult, though.
It's a really hard one. We see it quite a lot, actually, where people separate, and that happens, sadly. And often the person that's left in the house, you just desperately want to stay there, don't you, and keep that home that you're used to living in. The biggest thing is look at your options. You know, if you're struggling to keep that repayment yourself, is there anyone else that can come on that mortgage with you? We do a lot of that. You know, when we see people separate, sometimes you just need, in that transitional period, to have someone else on the mortgage with you for a part way. They don't have to go on the deeds of the property, so they can still help you with the borrowing without owning the property. So we'd look at options like that for you, really. But if you are sort of with that lender and you really are worrying if you can make the repayments, then call them and speak to them to see what you can do. There are different options that we could look at to try and reduce, extending the term, for example, depending on your age. But it's really looking at the short-term plan and the long-term. How are we going to keep you in that house that you love and don't want to leave?
Sarah, what are the legalities when it comes to having a joint mortgage?
Yeah.
Someone leaves.
Yeah.
Are they still legally eligible to be paying their part of the mortgage?
Yeah, they're legally responsible for that mortgage. So if those payments don't get kept up, they are going to have that damage on their credit report as well. So
But would that affect Sheila's
it would
credit
affect
report?
both of theirs.
Right.
So they are jointly liable for that mortgage. So it's in both of their interests to keep it up when a separation occurs, or to try and remove that person from the mortgage, which I'm guessing would be a desired outcome in the future. So you need to work with someone who's going to walk you through that, what you can do today, what you can do in a few years, and then what you can do longer term to get you exactly where you want to be.
We hope that helps, Sheila.
Good luck, Sheila.
Very good. That's very good information.
No worries.
Thank
You take care. Have a good day.
Cheers.
Bye, Sheila. Ash has got in touch, actually, and says, where's the best place for renewal rates? My mortgage is up for renewal at the end of October.
Yeah.
Can you advise about where the best place to go?
I can't tell you where the best place to go is because it changes every single day, but the best person to go to is a good advisor that's going to look for you. Me, basically. So, yeah, they need to look. And when you're looking at brokers and advisors, make sure you're asking them, are you going to reprice my deal if rates come down? Because we're seeing rates go up and down, down again. Some brokers won't do it as a natural part of their service and you'll end up paying a higher rate. So it's really important.
Because you'll pay the rate at what they've quoted.
Exactly. Because for a broker's point of view, speaking for the brokers out there, they have to redo the deal and you get paid once and that's it. So some people won't offer it, but they should be. Our job is to make sure we get you the best mortgage rate we can give you. So make sure, in answer to Caroline's question, Ash's question, sorry, is that if your renewal is coming up, that you're looking at it now, that you're securing a rate. Don't be afraid of securing a rate now, because your broker should be looking at it again for you if they come down again.
In a few months.
So you're giving yourself that security now. And then if it gets better and improves, then you'll obviously hopefully get that better rate as well.
It could be malleable a bit. You can manoeuvre it.
So 6 months before, which we're well into now. So definitely look at it ASAP.
Nice.
Good to know.
Next, we've got a message from Shanna. So can we transfer our mortgage to a new property? We came to the end of our fixed rate mortgage and we remortgaged with the same bank this year. We are selling our house and we want to purchase another property. Will we be able to transfer our existing mortgage deal to a new property as long as it is the same price or less to save early repayment charges? Now, our mortgage is with Nationwide.
Well, the good news is yes. Nationwide, you can port your mortgage, take it with you. Whatever the rate is on that portion, you'll keep. You'll just need to do the bolt-on bit with Nationwide. So you'll need to borrow the next additional bit, assuming you'll need to borrow more to move. Add that onto your mortgage and you'll have two rates for a little while, but then they'll come together in the end. So, yes, you can with Nationwide, which is really good because an early repayment charge, for those that don't know, if you are fixed in to a period you have to pay to get out of it, they have to pay a penalty. They won't charge you that for that port.
So it would be beneficial to try and move that mortgage because it wouldn't work out any less if you did have to pay the early repayment charge, you don't think, by getting the new mortgage?
No, I mean, depends on the rate. If the rates were really brilliant at the moment and they were not very good when you took it out, perhaps.
Pay the repayment,
But otherwise, take it with you because you've paid that product, you've paid to keep it, take it with you and then you can add on top. So
is that called something, Sarah?
Porting your mortgage.
Porting your mortgage.
Porting your mortgage. So if you're someone that's wondering the same thing, have a look at your mortgage offer. There will be a section on it that says about porting, or call your advisor and they'll be able to tell you with each lender.
Give Nationwide a ring.
But Nationwide are a definite yes.
Give them a call, give them a call. How long have we got left on this? Oh, we've got 3.5. We've got ages. My God, we're going to go get everyone's mortgage sorted. I thought we were going to a break. Caroline's been in touch, Sarah. And Caroline says, I'm in a 5-year fixed mortgage. Can I still look for a better rate mortgage with a different mortgage supplier? Or am I stuck for the full 5 years with my current mortgage supplier?
Well, what we just talked about there, that early repayment charge is what Caroline's going to be paying if she wants to leave. So my question to Caroline is why? Why do you want to leave? Perhaps she secured a rate this time last year. The rates were a lot higher. You know, the average fixed rate was over 6% this time last year.
High.
So perhaps she's looking going, you know, I've secured this fixed rate for 5 years and I don't want it. Maybe. But it depends what that early repayment charge is. We can look at it. You know, even if what I really want to get across is people sometimes don't talk to an advisor because they're worried about wasting our time and not giving business. But actually, you've got to get advice years before you need it sometimes. She should talk to an advisor and get them to look because it might make her feel better if she goes, actually, it's cheaper for me to stay.
So in that
than
instance, if you're thinking, right, say, for instance, it was last year, I've spent a lot of money with where the interest on this mortgage was a lot higher, it'd be a case of working out the early repayment charge.
Exactly.
What are you going to save on the new mortgage? What's the greater good?
Exactly. Perfect.
I'm going to become a mortgage advisor.
You should become a mortgage mum.
Can I come be your apprentice?
You can be a mortgage mum. We'd love it.
But it is, isn't it? That's how you'd work it out. If your early repayment charge is not going to be £10, but you're going to save 15, you might as well pay the early repayment charge.
And that's it. You've got to, you know, really look at that and go, what's the cheapest with a professional, and we'll work that out with you. So
Brilliant.
You know.
I always say you're so clever.
You are so clever.
People don't realise how clever you are.
Ryland Mortgage. So I'm going to open next week.
I always call him Ryland. This is a message from Andy. Angela. Now, my mortgage isn't paid off. Will I lose my home? I have a few issues with my mortgage. I have a 25-year mortgage, which I have only been paying the interest on, and I have just under 5 years left to go. Now, I am worried about what will happen when I haven't paid off my whole mortgage once the remaining 5 years comes to an end. Like, what will happen? Will I lose my home? Please, can you give me some advice?
I think there's a lot of people in the UK that are in this position.
Yeah.
You definitely need to get advice around it. But my key thing for Angela is don't be alarmed. It doesn't go from A to Z. You don't go from paying your mortgage on interest only to losing your home in 5 years. There's a lot of things that can happen in between that. There's something that's really popular at the moment in the later life lending market. It used to have a bit of a bad reputation, but actually you can get some really good mortgages that take you to the end of your life if necessary, and allows you to keep your property and stay living in it. That's if you really need that. Your lender may be able to extend your term for you at the end of that mortgage. They may be able to give you other options, but there's more to look at than just going, I can't pay it anymore, therefore am I going to have to lose my property. But as with anything, like I said, get advice early on. I don't want Angela worrying for the next 5 years about this. Talk to somebody now. It doesn't matter if you don't need it yet. At least you then know what you're planning for, and perhaps there's something that Angela can do now that's going to help in 5 years, that little bit more.
Yeah.
So definitely still get advice, even
A lot of
if you
people
are
are worried,
waiting.
especially in later life, aren't they?
Definitely.
Like Angela's saying, you know, you've got 5 years left on my mortgage.
Yeah.
You just instantly think, if you're of a certain age, well, they're not going to extend my mortgage.
No.
I'm not going to be able to go and get another
panic.
mortgage. But there are companies out there that can do that.
There are. There's a lot more help than people realise. There's a lot more innovation than people realise. We know the struggles that are going across the UK for people, so we're here to help, and lenders want to help.
Well, Sarah,
as well.
thank you so much.
You're
you,
so
I feel like
welcome.
I'm
Thank
a
you
mortgage
for
broker
having
now.
me. Yeah, perfect.
Literally what we're going to, and I love your necklace.
Thank you.
And listen, for those of you who are